Inventory returned by a credit customer. Remember, when you are doing inventory, anything to do with inventory and your customers, there will be two entries. So this is a customer who has returned 2 river kayaks that were purchased on the 11th of November. So we go to Accounts, Sales, and we are doing a new credit note. So in the credit note, we are putting in who the customer is that is returning the item. So in this example, it's Paddle Plus on the 14th of November. Xero will generate the credit note number. We don't need to have a reference. Now remember, when it is doing with accounts receivable, the selling price of the inventory, we must make the invoice tax inclusive, because the figure that we have loaded already includes GST. So in this example, they are returning 2 river kayaks. I change it to the quantity to 2, and that is the selling price. So we can see that we are issuing a credit note to Paddle Plus for 2980. We now have to approve this credit note and apply it to the amount that the customer owes us. So we click Approve, and it will take us through to any invoices that the customer has with us. And you can see there is only one. So we are going to issue the amount of credit and put it against the original invoice. So what it is doing is reducing the amount that the customer now owes us. So we click Allocate Credit, and that has now been done. You can see here that it has been credited against that original invoice. That is only the first part of the equation. We now have to complete a manual journal for the cost of goods sold transfer. So we come to our Advisors button and Manual Journal. You can see the list of all the manual journals that we have previously done when we were selling inventory. So we are going to create a new journal and put in the appropriate narration and date. The narration will be to reverse the cost of goods sold transfer on the return of the river kayaks. You use the date from the exercise, which was the 14th of November 2015. The description will automatically come up, and the 2 accounts are the river kayak inventory and the river kayak cost of goods sold. Remembering, in this example, the customer is returning 2 times the kayak, so we must times the cost price by 2, so that will be 1,150. This time we are debiting inventory because the customer has returned it to us, so it is coming back into inventory and it is being credited from cost of goods sold. The 2 sides balance, and we post.